Hello, my wonderful people. I'm back again, and this time round, I'm just going to give a scalping strategy. Okay, I'm going to give a scalping strategy because not many of us do have enough capital in our accounts to be able to catch spikes, because spikes should be very exact, otherwise it will keep on draining your account. So this strategy here is for scalping. Like if you are able to get 10 candles and without getting a spike, or if a spike comes, it won't be much that will destroy you. So that will be very beneficial. Okay, so this strategy specifically is for scalping, and you need to be very keen with the trend. Okay, you need to be very keen with the trend, and but otherwise the strategy is very good if you are disciplined and have proper money management. If you say you're picking 5 candles, don't go past that. Okay, you have to be very disciplined. So this is how the strategy goes. So ignore what is happening on the main chart. Actually, what you just need to get from the main chart itself is the moving average 200, this here. So moving average 200 exponential apply to close. That is what is on the moving average. And then we also have the MACD at default 12.26.9 applied to close. Okay, and then we have um, a stochastic oscillator on our third window at default also, but make sure you put the background colors to be black, and then check the levels very clearly. We have 20, 80, 90, 10. Those are the levels for the stochastic. We do not want our stochastic to show, so this is why we are putting the colors to be the same as the background. And then on the stochastic, you just come and add your Ichimoku. Okay, so your Ichimoku as well should be at default, but make sure these three should be the same as your background color. So all we need is these two. These three should be the same as your background color. So the settings for the Ichimoku is 92652. Okay, so that is it for the settings. And this is how the strategy works. Every time this Ichimoku here, this is boom 500, also for the crash, for the boom 1000, it works on all the 4 pairs. This Ichimoku should reach between level 80 and level 90. When the spikes come, it must take it up to level 80 or level 90 for you to consider placing a trade. Okay, so let's check a point like that. If I would see such a scenario here, I would, you see, like when we started moving, it was in the middle of our chart here, and then all of a sudden it shifted. You see, it shifted. So if I would see this setup here, I would comfortably place a trade, because anytime your primary indicator shifts, I've said that again and again, anytime your primary indicator shifts, it tells you that this place that has been created down here, the market will cover it before a spike comes. Okay, so as much as it is not meeting our target here, but I would place a trade here, and it would be somehow a long-term trade, because it is clearly showing you that this is a trend reversal. Okay, I need to put my data off so that it does not disturb me. So here we are. So here it's in the middle, and then it shifts. So after this spike and you see it shifted, you can comfortably place a trade. And this is a kind of trade that you can hold up to 20 candles. Okay, you can hold up to 20 candles. And why it's giving me also the confidence is that our moving average 200 is moving across us. So this clearly tells you that we are now going in the direction, it's a beginning of a downward trend. And you see even our MACD has been ranging. It's neither up nor down. It tells you that the power that is in the market at this time is equal between the buyers and the sellers. But this Ichimoku here tells you that the power has shifted from the buyers to the sellers. Okay, so this is a beginning of a trend. So in this setup, I would place 20 candles. I would sell for 20 candles. Okay, let's see. Let's see if our prediction is right. You see? So you would have comfortably gotten your 20 candles here. Comfortably. So where would have been my exit? I would have exited if this red line comes and touches level 20. That is where I would have exited. So when it came and touched like that, that is where I would exit. Okay, and please note again, this is zoom out, no, zoom in level 2. Zoom in level 2 says there's the exact very small one and then the number 2. So this is zoom level 2. Okay, let's continue. So this is one of the setups that can be comfortable to trade the trend. Okay, so let's continue until at least we meet our requirements again. So when you find this Ichimoku below here, it tells you we are ready to spike going up. So if you want to catch spikes, though, I'll still do a video for that, but this is your setup here for catching spikes. Again, the requirements is still exact like it was in our previous setup. This one is a ranging market, no strong trend, and here we are near 200. So this is a very good setup for catching spikes. You see, and the spikes came. So you see again, look here again. So this point here, our Ichimoku is in middle, okay, is in the middle, like balancing between the buyers and the sellers. Let's check what happened. You see, it's shifted. So anytime it's shifted as it happened previously again, this is an indication to tell you that the market will cover all this space. So anytime your primary indicator shifts and you wanted to sell, please run away from the market. This is an opportunity, in fact, to catch spikes. So if it shifts like this, place your trade for spikes. Okay, let's see. Oh, sorry, I've missed that setup again. It was at the extreme end. So here, I think it was after, yeah, it was here. So after this shift here, let's see what happens. You see, spikes come there, more spikes. Okay, now this is now the setup that I wanted to talk about in this strategy. For you to scalp for 10 to 15 candles comfortably, okay, it is when your Ichimoku reaches this point, it should cross level 80, and if it touches level 90, the better, but it should at least cross level 80. Okay, again, if this purple one reaches between that level as well, the better. Okay, but if it is the red one alone that reached there, you can sell for 10 candles. If it is both that reach there, you can sell up to 15 candles. Okay, so let's check. You see, you got your 10 candles comfortably here. You got your 10 candles before it started reversing on you. Okay, but again, you see this peak here and this peak here are not very far from each other. In fact, if any time you are caught by a spike when you are within these zones, it will not take you out of the market. If you had really placed, if your Ichimoku was between level 80 and level 90. So you see this height here and this height is not very high. So if you had placed your trade around where the red line is, so you would have been only at around negative negative of like 5 candles at most. Okay, what else will tell you that we are not going far is the peaks of the MACD. There is a divergence here. There is a divergence here, so it will clearly tell you that we are going down. So what I would do if I'm caught by this spike, I would place another trade here. Okay, as long as our indicators here are still within our zones, they've not shifted, so I would place another trade because this is a peak point of catching the trade and come down with it. Okay, so let's see. You see, small one came but it didn't take you out of the market, and you got your 15 candles very comfortably. Okay, you got your 15 candles comfortably. But in such a setup, especially if the two lines crossed above level 80, I can even stay for 20 minutes. You see, very long. I can stay for 20 minutes. What you can do is you can open a bit of large lot sizes, and then as you continue going down, you go closing them, and let very small lot size run. Okay, up to at least when your red again is touching the bottom here. But don't let the entire lot size to run all the way. But in this setup here, you can get around 15 minutes very comfortably. Okay, now the market again reverses. Let's look for another point here. So it touched, but it didn't go above. So I would be a bit careful on this. And you see our purple one here is still very far. So I would be a bit careful on that. Let's see, you see it's even shifted. Let's see, you see it's shifting. So anytime it's shifting, be a bit careful with it. It's shifting. This one, this is what I'm talking about. So here, you see like there is going to be a reversal, but it's around area 80 and they've both crossed. So in this kind of setup here, you can take but half of the minutes that you always take when it reaches the highest point. So you can take here, but around 10 candles, don't go past 10. Okay, you see, that is what I was talking about. So you did gotten your 10 candles, but don't go past 10 candles because it didn't meet our requirement of going between these two lines. Okay, so let's see if it's now entered. You see it's shifted, so that is not a good trade. You see it entered and then it shifted, so that is not a proper setup. That is not a proper setup in the sense of as long as it's shifted, the space that it has created on top, it has to cover it completely. You see, this was a place, you see. So the red one entered up to this point and then it immediately shifted below. So when it shifted below, it tells you that this point that we've created here, spikes will come until it covers it before reversal happens. So if you want to catch spikes in this setup, you can comfortably do so. Let's see. You see it's still shifting, so the spikes will still come. Okay, you see spikes came here, spikes came there. Let's wait and see. So here we are, both lines on our level 80. So this is a good setup. You even see the MACD. This point, this one is high, this one is lower. So there's a divergence here, Also, this point is higher, this point is lower. So there's also a divergence there. So at this point, you can take around 10 candles. Okay, around 10 candles. So why am I saying around 10 candles? Is because this previous one it spiked on moving average 200. So the best it would come is to come and reset at 200. Actually 200 is always the spiking point. So if you are near to 200, be a bit careful because it always, if it is still a trend continuation, it will always spike in area 200. So be a bit careful with the area 200, but you had gotten your 10 candles here. So let's check again. You see it's still shifting here. it's still shifting, so be a bit careful with that. Still shifting, and then you see, so that is what I meant with trend continuation. So here our red has met our requirements, so the best I can go here is also 10 candles, not more than that. You see, so it crossed, yes, and I was not very safe with it because we were at around area 200. So but I got my 10 pips, and there it was a trend starting and it went all the way down. We got our 10 pips there, 10 candles I mean, trend continuation. So let's go. When you find this shifting like that, you know that the trend will still go down somehow before the spikes come. So it's not very good if you want the requirements have been met. And you see even there is a divergence with the MACD, and we've reached our point here, both lines. So you can still, so you bought here, this spike caught you. After the spike you bought again, you sold I mean, and you came down with it. See, so a few other spikes, but they are not taking you out of the market. And this kind of setup here is one that you can take between 10 to 15 candles, and this is boom 500, yes. So you know the 500s tend to spike more. So if it was the 1000s, you can get more candles, okay? So if you are doing 10 to 15 for the booms, then you can do around 15 to 20 for the 1000s, okay? So look again here. If my purple line is very far, I can comfortably do here 10 candles and I'm out. Yeah, so you see it now went again more so in my favor, but I could do 10 candles and be out. This one that you find it shifting, you see it's almost down and then it starts shifting. When it's shifted like this, I told you it is an opportunity to sell because the market will cover all this area before it starts spiking. Okay, so see, it clearly indicates the beginning of a trend. Okay, it clearly indicates the beginning of a trend, and when it reaches this point, there are other strategies of catching spikes using this indicator. So I will highlight that in my next video because this was just more or less like for scalping and catching few candles without being caught by the spikes in the market. So that's it for this video, guys, and please join our Telegram channel, and also refer people to our channel, and God bless you. Bye.